Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Monday, March 12th, 2018. Not a whole lot went on today. The Dow was weak, the Nasdaq was strong, and the S&P was pretty flat, and that's kind of what I was expecting. This is the morning notes and what I had put, and I was saying that I was looking for some backing and filling in the coming hours and days, but it might be limited because we could see another spike higher, and that's from a technical view. There's a bearish wedge that's forming, and it suggests that the ES will hit 2840, and that the S&P has the same type of pattern. But that's the bullish part of it, and that the bearish part is that the target, because it's a bearish wedge, is below the 2600. So the targets that the range that we were looking for today was on the high end 27.99 and on the low end 27.88. So if we go and take a look at the S&P, the high was 27.98 and the low was 27.79. So we stayed within the range that I was looking for, and right now it looks like it's consolidating. It could be an A, then we have an A, B, C, B, and now we're getting a wave C down. And if that happens, what I would be anticipating is that we would probably see buyers step in right around this support. So if we get below these levels here at the 27.77, most likely it's going to come down to this 27.54 level. But here's the wedge that I was talking about, where it's a bearish wedge. And you can see when these patterns set up, typically what happens is it goes above the resistance line, and we have that the open gap at the 28.50. So if they head higher, I'm not ruling this out here. But again, if you want to trade and go long, that's fine. There's absolutely nothing wrong with that. I would kind of wait, like I said, with the pattern that it's in right now. It looks like it's consolidating. So if it came down and broke these lows, I'd probably be, like I said, look to buy anywhere between the 27.60, 27.50 area, maybe even someplace down in the 52, and put a tight stop in place, because there's no guarantee that we are heading higher. But if this pattern plays out, then what happens if it holds this support in this area? Then once we break through the previous highs here at the 27.98, that's where it opens the door for these upside targets here. Now, if we start breaking down and start breaking support, then you want to just wash the upside out, because it won't be playing out. This is from a technical end, and why I think that it could head higher, and that's because here, if we look at the 60-minute chart here, and this is our price oscillator, we don't have any bearish divergences. So where we made the high, right in the resistance zone that I've had for a very, very long time here, we ran right into it and then pulled back a little bit, and if you notice, that's right where the high was. So there are no bearish divergences. So on a technical front, we don't have any sell signals that are in place. So what that would suggest is that if we get some backing and filling somewhere down between that 27.50, 27.40 in that area, and it holds, that we will then get another spike to the upside. And if that happens, that's when we start setting up the bearish divergences. And when it starts getting to that resistance area, it's going to start running into the time period that we want to pay attention to, that Woody's been showing us. And from there, it's going to be, it's probably going to be a really good trade to the short side. But guessing where it goes, that's not really, I'm not worried about that. I want to wait for some kind of trigger on price to be able to get me short, so then I could turn around and just set a stop. And what I mean by that is, if we took out this low here at the, we make a lower low than we did today, that would technically be a sell trigger, because you can see we made a lower high, and then that would make a lower low. But being we don't have the bearish divergences, what I think would play out is this would be some type of bull flag that will be forming. And if you want to just use a channel on it to figure out where that would be, where the target would be, you just kind of measure it like this. And again, we're looking somewhere down in this area here, or could go a little bit lower. But my point is that it would be just a bull flag, and that would hint that we would get another spike up. And again, the target area would be anywhere from the 28.30, and it doesn't have to play out on here. We have the open gap that's at the 28.13, so that could be a target. This is just a pattern that I follow. It doesn't mean it has to play out. And the main thing is that once we get the bearish divergences and we start heading closer to that to the time period where Woody's looking for another one of those very fast moves to the downside like we saw here, then that's where you want to be positioning yourself on the short side for that move. And most likely that's going to be when everybody's bullish on the market. And we know that we had a 99% reading on Friday, so we got people leaning that way. Again, I don't see on the technical end that this was the top, and I believe that if it came down, we would get another spike up. But like I put in the morning notes, I'm looking at this pattern until it proves me wrong. And I think if we get below this 27.54 area, and especially through these moving averages at the 27.30, then we're heading down lower. And again, the thing is that this target is looking all the way down below the 2600 level. So I'm kind of hoping that it goes up, gives us, because we're not short the market, we're not long. Well, some people could be long. We never we never made the lower low. So if you're long, you want to protect stops with your protect your profits with stops. Me personally, I'm not long, so if it heads up, I want it to. So it comes up into these levels here. We start getting some technical sell signals, and it runs into the turn date that Woody's watching, and we see sentiment continue to balloon on the upside, where everybody's looking up and thinks the worst is over, and then we get the clipper, and that's where when you're positioned right, you make a lot of money on these moves in a very, very fast time period. And then even if you cover on these big moves and you miss more on it, this is the move that you want to be buying the dip. And that's what Woody's been saying, is that it's going to be another buy the dip opportunity. So if we just take a look at the the daily chart here, this is, you can see the pattern clear here. So if it heads up, we have the open gap here. This would be a possible target. Not saying it's going to get there, but it would make sense. And again, below the 27.44, this is the 50-day moving average. That's where things are going to change. And if once we break this level, that's when we're looking at a move probably down to the 25.74, which is the 200-day moving average, and it got tested before. So we never really had a complete test of this move here. And I have this as a wave 4, and honestly, like I've been saying, I'm not really too concerned on the wave structures and where we are. We're in the no man's kind of land here, where we could head higher, we could head lower. And below the 27.45 level, I'm looking at that, or 27.43, I'm looking at the top is in, and this is just an ABC, and now we are making a wave. So the way that I would look at it, if that is going to be the case, this would be your wave A. We had an A, B, C, wave B, and now we're going to make a wave C down. And if that does play out, then we're putting the wave 4 here and saying that's it. And why is that important? Because if we look at the weekly chart, that's where this wave 4 will be. Right now I have it that it's here, but the thing is that it may go a little bit lower and go to the 23.50 level to make the wave 4, and then we make the wave 5 up. So the point is that we don't want to marry one side right now. We want to be open-minded. We want to see when we're approaching a specific turn dates and know when sentiment is extremely on the bullish side. And once patterns start playing out and we start getting technical divergences or sell signals, you jump on the short side and you limit your losses with a stop above. But if it plays out, this is what we're trading right now, is this type of clipper, and that's what's expected. So right now I'm staying neutral. I can, like I said, give you reasons that we could head someplace up into the 28.40 level, even the 28.50, and it would still be a bearish pattern. And if it doesn't get up there and we take out, say, just going off the daily chart and say the 27.45 level, then that's going to trigger selling, and we'll, just jump on the short side around here and then look for the move to come someplace down into the 27.50. So it's still a 200-point move, and that's what we're looking for. I'm not looking for we're making, starting a new bear market or we're heading up to new highs. That part doesn't really bother me. As long as we catch these clippers on the downside and are buying when everybody's panicking, we make our money that way. I'm not, the long-term part of it is not really a concern on my end, because even if we head into a longer term downtrend like Woody is expecting going into the year 2021, we're going to get moves like this that are going to be up and down, and we're going to be able to trade both sides. And being able to trade both sides, you're going to have to look on all ends of it, things that people don't look at. So that's going to be sentiment. That's going to be these technical turn dates that Woody looks at. And then you combine them on just regular technicals and find out where to start positioning your trades, and you put a stop if wrong, because things aren't always going to go as planned, and that's why you put protective stops in place. So for tomorrow, it's actually, this is it. We're still within this this trading zone, and if the bears push it through the 27.78, pretty close to where we closed, then I'm anticipating that we could get a move somewhere down into the 27.52. If this was it and they pop higher, I wouldn't short until we start seeing that 28.15 area, and then possibly even popping up here. But we're going to let price tell us when to get short. And until then, just relax. You don't have to be in a trade every single day. So with that, let's see what plays out tomorrow. And like I said, a pop higher most likely will give us the bearish divergences that I'm looking at, and we know the resistance areas that we want to watch, and the support areas are at your 27.56 down to the 27.36, and below that, that's when we can start seeing some panic, and that might have been the wave C, and now we're heading lower. But again, I'm leaving the door open for whatever the market wants to do right now. I know there's a good trading period coming, and with that, let's see what plays out tomorrow, and have a great night.